We have the world's largest pension fund, the world's leading insurer, and the world's leading investment bank. So we have a variety of perspectives across the capital markets. And I'll go straight to you, Hiro. How are you adjusting your portfolio towards a sub 2 degree world?
Sure. GPF manages 1.6 trillion US dollar worth of Japanese government pension funds. And we have a very well diversified portfolio with more than 6,000 company stocks and the bonds issued by 3,000 issuers. So that portfolio is really representing where the world capital market is heading to. And recently we did the TCFD compliant analysis of our portfolio, and unfortunately it was diagnosed that our portfolio is heading to a 3.5 degree plus world. So that's actually kind of evidencing where the world is heading. So in our portfolio, we have 50% in equity and 50% in fixed income. So for equity portfolio, we are shifting gradually, well, actually not more than gradually, our index from the traditional market cap weight index to ESG themes, including carbon efficient index. So we have mobilized roughly like a $40 billion investment from the traditional index to ESG or carbon efficient index. And also we have joined the investors group initiative, a group engagement program called the Climate Action 100 Plus, to have the engagement with the portfolio company which has heavy, the carbon intensive industry. So given our portfolio, which is really representing the global capital market, all those things we are doing is not really trying to make our portfolio look better, but by doing that, we are trying to affect the whole market. So the index has been a very convenient tool for us, a very effective tool, than trying to find here and there the carbon less incentive or like less intense or renewable energy investment. And for the fixed income portfolio, it's been a bit slow, the market to pick up, how to, align the fixed income portfolio. So we did a great study with the World Bank Group, how to integrate environment factors into fixed income, and we started investing into the green bond. And that's the way we approach our portfolio. But still, we require much, the quicker shift of the market to achieve Paris Agreement.
Okay, we'll come back towards the end on what else is required. So 3.5 degrees. Denis?
Yes, as you know, we've been involved in the TCFD as a vice chair, and this was a great initiative. And since then, we've looked at the warming potential of our portfolio. And when we look at a reference portfolio based on our asset allocation, the warming potential of the portfolio is 3.7 degrees. Our own portfolio is well below that, but still significantly above 2 degrees. We hold a portfolio of 550 billion euros. And of that, we have 80% of bond, and with that, 50% is government bonds. And when we look at government bond portfolio, if we buy US treasuries, the warming potential is 5.5 degrees. If we buy German or Japanese bonds, the warming potential is 3.5 degrees. If we buy French bonds, it's 1.9. So the vast majority of sovereign assets are above 2 degrees.
Yeah.
And on the corporate side, we do the same analysis. I think it's important that we move in that direction, but we cannot just on our own get to a below 2 degree portfolio. We invest as Hiro. We invest in green bonds, but there is not at this point not enough issuance of green bonds. We have more green corporate bonds than green sovereign bonds because the landscape is not going fast enough in that direction.
Amazing. Yeah, so I just re-emphasize the sovereign point, which is as an insurance company, you do liability-driven investing, at least part of it, and the sovereign portfolio by itself biases your portfolio well above 2 degrees. David, maybe shifting from longer-term perspectives, core of the global capital markets, you're seeing all the flows. What are some of the most, how much is this part of the conversations you're having with investors, with CEOs, and what are some of the more interesting ideas or important ideas that you see coming?
Sure, and I'd say the conversation has amped up materially, over the course of the last year or two. And I'd say there's no place that I go where, with either CEOs, with investors, with market participants, this is not a significant conversation. The volume's different in different places. I'd say particularly when you're over in Europe, you can just feel the groundswell of really popular sentiment that the urgency of this is elevated. I think here in the US, it depends where you are in terms of the level of engagement, but it's up everywhere and there's a lot of focus on it. I think the interesting thing that we wrestle with is from a capital markets perspective and the availability of capital, it's still relatively niche in terms of where it operates. So there's been a big growth in green bonds over the course of time, significant. Last year, about $250 billion of issuance of green or sustainability linked bonds. But that's very, very small. It's 1%, kind of capital markets activity. It's very, very small. And so the question is, how do you find things that more mainstream this into the capital markets? And I think one of the big issues, green bonds are terrific, but one of the issues is that green bonds segregate capital. So you're raising capital that has to be ring-fenced or segregated, in a certain way. We just did something that I think is directionally the course of travel for NL. We issued a sustainable goal bond that basically was a general corporate purpose bond where the proceeds of the bond could be used for any activity, but they have set certain renewable goals, and if they meet those renewable goals over the next 3 years, the cost of that bond will be less than if they don't meet those goals. So they've gone out publicly, they've stated the goals, and we raised $1.5 billion in that context. So to me, that's just a representative example of a more mainstream capital markets transaction that allows a broader acceptance of the capital markets as a tool for this over time.
Yeah. And the crucial point, which is moving from sort of exclusion or deep green and towards momentum and tilt, if you will, because that's how you get to mainstream. One of the mainstream initiatives, you both mentioned it briefly, I think we should salute Mike Bloomberg on the TCFD, getting that going. Hiro, I'll go to you quickly. Just perspective on this. There's 120 trillion of assets that want TCFD compliant disclosure. How about the supply of that disclosure and the quality and the usefulness? Because there's been a big shift in Japan.
Sure. I mean, the last year, there was a big, the take-up among Japanese corporates to use a TCFD as a framework to disclose their climate-related risk, as well as their strategy for the future. And the good thing and a positive thing about a TCFD disclosure is, I know you want to make it a compulsory, which actually they have a very, very significant impact, which we wish. But even at the moment, being as a voluntary disclosure framework, it gives the chance for the corporate who are under huge pressure from the investor to discuss on the long-term strategy. So we have been encouraging Japanese corporations to disclose more and more TCFD, while it's still voluntary, because the margin of error is much higher, so they can test. And then we are actually now urging our asset manager, our fund manager to utilize those information, because the stress, frustration has been among the corporations. Even when they disclose those information, they don't feel like that information being used in their engagement with the investors. So I think we have to just create a demand from both sides. Demand from the corporate to give to have the opportunity to discuss on the more long-term issues, and for the investor to use it for the analysis. So GPF really hold our asset manager accountable to use those information when it's disclosed.
Yeah. Denis, AXA was one of the founding members of this. You use it. Your perspective?
So there has been a lot of work going on with specialized agencies that are helping us measure the warming potential of our portfolio. There is not yet a commonly accepted standard, but we are moving towards that, and there is extremely good work going on there. The main rating agencies are buying the firms that have specialized in this area, and there is, as you said, pressure from the investor community on the firms to disclose better and better information. So I believe we are gradually getting there in terms of TCFD becoming a de facto standard, even if it is not yet compulsory. And we have, in most cases, we have the relevant information that is required to do that. And we have also On the other side, under probably your inspiration, Mark, the pressure from the regulators who are starting to stress test our balance sheets using the same type of analysis, what happens in a 2-degree world, 3-degree world, and so on. So I think the world, the financial world is moving, I would say, much faster than the sovereign world, in my view.
Yeah. And there's 2 points there, if I abuse my position as moderator. One is possibility of being compulsory, mandatory in the next few years in Europe, including in the UK. It's something being seriously considered, so getting involved and shaping it. And then secondly, the stress testing. I mean, David, I suspect that if we asked to stress test Goldman today about in a sub-2-degree world, given all your exposures, would you have enough information to actually answer that question, given your exposures to your underlying clients?
We're working at it, but the answer is we're working at it. And I think this gets to the directional point as to how you more mainstream this. The more there's a clear policy framework and a direction with respect to that policy framework, the more you'll get a reaction and a response to it from the markets.
You mean policy framework, you mean government climate policy framework,
yes,
right?
Absolutely.
Yeah, there's a crucial point. So we're time short, so I want to finish on, the UK is going to be in charge of what's called COP26, which is the process, the climate policy process, global climate policy process next year, along with Italy. And then the following year, UK is G7 chair and Italy is G20 chair. One of the obvious focuses would be what needs to be done to advance mainstreaming and aligning private capital flows to a 2-degree world, sub-2-degree world. And you've all thought a lot about this, and you participated in an important report that I think is coming out today, the CFLI. Thoughts, 1 or 2 things that the UK should focus on for private capital flow alignment? Hiro?
Well, I think this report, we really discuss a lot that what really has been prevent the private capital flow into sustainable the investment. And we listed up several the issues. But we're not going to, I'm not going to expect all of those will be solved at the COP or overnight. So what we think to do is that we put we show investors' demand to policymakers. We need to have clearer policy framework, but at the same time, I think that the investors should take advantage of a lack of clear policy at the moment to make a better return for the investors. So we need to do both things, pushing the policymaker to create the clearer framework to increase the predictability of our investment, but professional investors should take advantage of it at the moment, which we really don't see very often these days.
There's a first mover advantage, didn't it? Yeah.
The report talked a lot about infrastructure investments in emerging markets. And for regulated companies like insurance companies, it's not easy because there is a currency risk on top of political risk, and those countries are not necessarily well rated. We need more public-private partnership in that space, so that the pension funds and the insurance companies can work with the multilateral development banks, and multilateral development banks should be able to sell their mature portfolios rather than ask for more capital in order to make room for the private investors in that space. That's one area. A second area, which is important in my view, is that there needs to be more pressure on the sovereigns, and I believe that the IMF needs to incorporate climate analysis in its analysis of the resilience of countries, and that would probably make the way for a better alignment between the private capital and the public capital.
Yeah, and bring forward some of those infrastructure investments for those sovereigns that are going to save money in the future. I should just reference quickly that you are chair of the IDF, which is looking to close that protection gap of the causes, the impact of climate change in these environments. David?
There's not a lot I can add to that. I'd emphasize what Hiro had said. I think there are opportunities to be creative, and I compliment what GPIF is doing. For example, they've got a portfolio. We manage a portfolio of Japanese equities for them that has what's called a carbon tilt, where obviously they're trying over time, while still tracking the index, to bring down the carbon exposure, but to not disinvest. And it's a creative way to make progress, to move in a direction that I think we all have to move in. So I think there's a lot of latitude to be creative and find ways to move in the direction. Fundamentally, I'll go back to a clearer long-term policy framework will create the commercial incentives, pressure on governments. You know, as Denis is saying, when you get to the emerging markets, I think the multilateral development banks are very important because you don't have the capital formation there to support what we're talking about, and so you need help. And so those are things I would emphasize.
It's a critical, I think it's a great place to end. I mean, there's a lot of momentum. You've got longer-term capital. You've got the core of the system, and a system that will pull forward adjustment if there's that credibility that from the policymakers, the climate policymakers that's
Absolutely.
needed.